have an opportunity to buy companies that are world-class that used to trade very expensive over the years and are now not expensive. So if you're a new investor, I would say this is one of the best times to get involved in the stock market in many, many, many years.
Welcome to the My Future Business Show, where we get you in front of your best audience and keep you there. Not only are we interviewing the biggest names in business to help you become even more successful, we're inviting you to book your spot on the show to help you grow your business. So at the end of the call, make sure you fill in the interview application form at myfuturebusiness.com/interviews.
Hello and welcome to the My Future Business Show. My name's Rick Nusky. I'm your host, and it is a pleasure being your host and bringing you great guests. And today I'm with no other than Lior Gantz. Welcome back to the show, Lior.
Thank you for having me back.
Absolutely. Now, just for context, we're going to be talking gold, silver, lithium, global events, and a number of other hot market insider topics during this content-rich call. But since the last time we spoke, Lior, we have expanded our audience base significantly. So I think it's important for you and I to spend some time going over the basics again. So let's start with where you're calling in from today.
Tel Aviv.
Tel Aviv, fantastic. And that's been home for you forever?
For 37 years.
37 years. Now, what's the best thing that you love about living there, Lior?
Tel Aviv? It's
the beach?
Well, the beach is nice. It's just very it's a city that keeps on innovating all the time. The pursuit for quality is relentless in anything. So it's just a very high quality city, and if you research it right now on Google, something you'll see that it was voted the most expensive city to live in the world.
Yes.
And lots of other things as well. It had a renaissance about 20 years ago,
mm-hmm.
And it's been on an absolute growth spurt in terms of the quality of it for the past 20 years.
The upward trajectory is undeniable. I also hear that you guys have a solid hub for software innovation. Tell us a little bit about that.
Israel, I guess since the 90s, since the .com,
mm-hmm.
because what happens here in Israel, everyone is mandatory going to the IDF when they're 18. And the IDF has a lot of intelligence units and a lot of technology units. So basically, when you're 21,
mm-hmm.
are thousands and tens of thousands of people that just got to experience 3 years of top security technologies, and they can go to the private sector and then
leverage that.
And build tech companies. So that's the kind of the advantage that a lot of people here have, because if they go to these units, they're exposed to amazing technologies and great people, get networking, and then obviously this is all funded by the military. So it's not like they go and take a student loan to learn all this, right?
Yep.
So they're a financial place as well. And the VC money comes here. Intel has huge hubs in Israel for chip manufacturing. Microsoft is here. Apple is here. All the big ones have a
presence.
Big presence here. So I think that's one reason why it's a software hub. It's also in recent years become a cannabis hub in terms of like technology, not the like personal consumption and stuff, and so much more. So the country specializes in intelligence, military, et cetera, because if you look at the map, we need to be vigilant.
Absolutely. Thank you very much for sharing. I'm loving this call already. Now, I wonder, we have a lot of new listeners who are calling in and listening to the show. So I think it's important to go back a few years and look into your life as that early entrepreneur. I'd love to explore, just for the sake of context, Lior, what was your first entrepreneurial experience? What got you into this game?
It's funny you ask that because my wife just had twins. We just had twins.
Congratulations.
Yeah. So when we finished at the hospital here in Tel Aviv, there's a way for you to move to a hotel that's like adjacent to the hospital, but the medical staff from the hospital and the medical staff in the hotel is the same. So they rotate, like they're one day they're here, one day they're here. So you basically get a hotel with a baby nursery, etc. So you can get medical attention while you're getting 5-star attention to sleep it off, and there's a doctor there, there's anything you need. Okay. So while I'm there, and this ties into your question, while I'm there, I'm having breakfast, and I'm 37. I'm going to be 38 in the summer. I see this person. He's 63 now, and I'm like, "How you doing?" And I know this guy because when I was 16, and this was 2000, he was 43, and he sold, or 41, and he sold a software company at the height of the .com bubble to an American firm for $4.5 billion, and the two partners split $700 million in compensation. And I was babysitting his only child at the time. He was 43, but he got remarried. He's 63, and he just had another kid. So the reason I'm telling you this is after that episode with him, in the 2000 and everything that happened in Israel during those years, the rush to get into investing was cultural. It was massive. And because I was doing babysitting work and this and that between the ages of 13 and 16, because my father's business, which was not high tech, it collapsed on him in 1997 when I was 13, and I started to work. So I started to work, save money. I was doing babysitting. I was doing like private basketball lessons. I was even in charge of the scoreboard at basketball games. So anything I can do to make money and actually save it. So by the time I'm 16, and this happens with like literally while I'm coming to his house, he's showing me CNN, and his face is there with like the amount of money. So
that got you going
really early, because what I did was I told my banker, like, how does this work? And he said, look, if your parents sign a waiver as a minor that you can trade in the stock market, back then it was like mutual funds, then I can get you started. I got both my parents to the bank branch. They signed the waiver, and his first research paper that he printed out was about China. This was like 2000. So I got invested in real estate really early, as you can see, in the age of 16. So my investing career started at 16. My entrepreneur career started when I was 13 out of necessity, because my parents told me, look, we have zero to give you. Like, if you want anything, you need to start putting flyers in the neighborhood and finding work. So I've been working since I was 13. I've been investing since I was 16, and it happened by necessity.
Yeah.
But it's a good thing it happened, because I think it was it got me on a path to independent thinking very early on.
Yeah, thank you for sharing, Lior, because this is great for context. Now, you talked about this gentleman who sold off his share of the company and took 700 million or some ridiculously good price. What other people, and I guess, what did you learn from that experience? Did you learn anything directly from him? And who else have you looked to along the way?
I didn't learn much from him because he was never home. I was basically a kid. But what I can tell you that I did learn in hindsight from him is that he's like the Israeli Mark Cuban. Talk about he sold a company for $4.5 billion. It never materialized to any product. Like they bought a product in development, like many other American firms back at that time.
Mm-hmm.
But it does show you in hindsight that when you're in a bubble and you're benefiting from that bubble, don't be naive and cash in, because if somebody's willing to pay, this is the right time. We just saw another bubble that happened in the stock market in 2020. We saw other ones along the way. If you happen to be early in an asset class that morphs into a speculative bubble, just don't be naive about it. That's the big lesson I learned from him. And capitalize on it. As long as you're already there, and as long you don't control the bubble, you don't control the vibe. If you're already benefiting, I think that's important to pay attention to, because otherwise, if he wouldn't have sold, who knows if that company would have even turned into a real business.
Yeah.
When you get that early on, that big of a sum, I think it's disrespectful to the employees and everyone else if you dismiss it, because it's a golden opportunity to exit. So that's what I learned from him. In terms of like real world, I have 3 dead authors that are the biggest mentors that I've had in my life. Napoleon Hill, Ernest Holmes, and Wallace Watless. And those, I think, helped me internally. So in other words, helped my psyche. Mm-hmm. But in the outside world, my mentor is definitely my senior partner at the business. He's a big mentor of mine. And I would say along the way, I've had like temporary mentors that have helped along the way. But the one constant is these 3 authors and my business partners.
Fantastic. I know that you have a lot to say about Warren Buffett. What can you share about your exposure to his way of operating?
So when I was starting out, like I said, at age 16, I was one of those kids in high school where you had the book, and then you have a Warren Buffett book tucked inside, and you actually are reading like Warren Buffett. Because what happened was I told the banker, I was like, how would I learn about this? And he said, well, Warren Buffett? I said, absolutely not. So he said, okay, well, you find a book and you start reading. And at that time, Amazon was just starting to send packages to Israel. So I bought the book in English, and I bought another one from Peter Lynch. And the nice thing about those two is Warren Buffett is all about brands and like competitive advantage, and making sure that. So that was easy for me because I was like, okay, I know brands. I'm a teenager. And then Peter Lynch, his book was all about my teenage daughter picked my best stocks, and I was like, wow. And she told him about things that are happening, like trends, and that's how he got invested in a lot of 10 baggers and 100 baggers, and he introduced those terms into the stock market. 10 bagger meaning something that 10x or went up 1,000%, and 100 bagger obviously is something huge where you turn $1,000 into $100,000. And he had those as well. So marrying those two, at the time when I was working for a clothing store, I looked at all the brands, and then I researched like who owns the brands. And I realized that like a lot of these brands have a parent company, and it was called VF Corp. It's obviously still around. It's a 120-year-old apparel company. They own North Face. They own Timberland and Lee, Wrangler. A lot of brands. You can obviously research VFC. I'm not. There's not an endorsement to that company. I'm telling you is basically that's how I got into my first investment, because Warren Buffett was like, do things that you understand, brands, competitive advantage. Peter Lynch was like, look at things that you see all around you. And I was working at a clothing store, literally folding these clothes and selling them, and that was like my first stock.
Wow.
I remember. I think it was like $6 a share. It's now like 70 or something, and if I'm not mistaken, it was like 6 cents a share dividend, and today it's like 42 cents. So basically, just to give you an idea, it would be like buying a home in 2000 for $60,000, and that pays 6 cents. So that would be pays $600 in rents. And today that home would be worth $420,000. I'm sorry, $720,000, and would pay you $4,200 in rents. So that stock is part of a group of companies called Dividend Aristocrats, which are companies that have been able to raise dividends consecutively without fail every year for over a generation, for over 25 years.
Wow.
There's like 54, 55 companies in that group. There's even an ETF where you can buy the entire basket. But that company fell into that basket without me knowing. And those are very unique companies. If you'll recognize most of them if you look up that group. And in hindsight, it was obviously a great decision in terms of that. But
yeah, absolutely.
Buffett, obviously, with the dividends, and understanding that the quote or the price of the security is not what you should be looking at, but you should actually be looking at what you're getting in absolute terms. What are you getting for buying this share right now? And think about that single share as if you're buying the entire company. And that really has helped in terms of selectivity, and also in terms of understanding competitiveness, because you can always look at a company and look at the entire index, such as the S&P 500 or any relevant index, and say, well, is this worth the risk? Is this single stock going to outperform by so much that I should not just buy an index fund instead? So that's one thing I always do. I always look at a given security and I always match it to, is it worth the risk compared to the index? And then I might, if I say yes, obviously I'd buy it. Sometimes I say yes and then I match. In other words, I buy 20 grand in a given security and I match it buying 20 grand more in the index fund. That way I'm matching the risk with market risk.
Yeah, fantastic feedback. I know that there's a lot of inexperienced people on the call today. They wouldn't understand a lot of these terms, and I think that's why it's probably very important for them ultimately to get steered back to your wealth creation group, and we'll do that after the end of the call. But I'm wondering, given that your whole experience in life needs to be about education, currency, watching global affairs, what are you seeing right now, and what are you watching? What's exciting for you?
So, obviously, in 2022, what's exciting is that the entire market is in a bloodbath. It's exciting because it's obviously a way to get exposure to equities at a far cheaper valuations. A lot of companies have beat. We just went through an earnings season. And a lot of companies beat on the top line, which is revenues, beat on the bottom line, and beat on EPS, and issued let's say, good guidance for the future. At the same time, because of what's happening with the threat of interest rates rising and inflation out of control, and now Russia into Ukraine, there's panic, a real panic out there, and you're seeing things that you do not see on a given year. You've never seen such violent moves in the market like we saw in the last 2 months. I have not seen them in years, where a company reports earnings, a huge company report earnings, an $800 billion company reports earnings and goes down by 26% in one day, like Facebook did. That's I've never seen, or Netflix or PayPal. You're talking about companies that are $300-400 billion and they lose $100 billion in market cap in one day.
Yeah,
that's pretty astounding. So I think right now what's exciting is that you have an opportunity to buy companies that are world class, that used to trade very expensive over the years and are now not expensive. That's one thing that I like. Second thing that I like is that the small cap companies are absolutely getting decimated, .com bubble style. So if you're a new investor, this is, I would say, this is one of the best times to get involved in the stock market in many, many, many years. Many years. It has been this attractive and this cheap. From the other side, from the threat side, I think what's happening in Russia and the Ukraine is really important, not because of those two regions. Those two regions are they're agricultural regions, they're sparsely populated. This is not what this is all about. What's happening in Russia and the Ukraine is basically Russia saying, we are not going to allow the Ukraine to enter NATO and place missile systems along the Ukrainian border where you're 4 or 5 minutes away from Moscow. We will not allow that kind of a threat level. And if you remember, this is exactly what happened in the 60s, where Kennedy and the previous presidents put missile systems in Turkey, in Italy, and in range of Moscow, and there was constantly a nuclear armed airplane flying above the skies in Russia, above the radar systems and the anti-aircraft systems. Always. So there was a constant threat, and obviously Khrushchev wanted, or the Soviet Union wanted the U.S. to feel the same thing, and via submarines they started to ship nuclear warheads to Cuba. So almost World War III happened. That is basically what we're seeing here, the start of a conflict that, if not managed right, could cause far bigger consequences. Right now we're seeing economic sanctions and things like that, but man, if this is not managed right, this is going to be big. And then even the bigger picture, and I think for you, Rick, in Australia, it's even more close to home. All you're seeing right now is a stress test for how China would look to take back Taiwan and what the U.S. will do. So Russia trying to take back the Ukraine into Mother Russia is equivalent to what China taking back Taiwan would be, in terms of President Xi's looking at how Biden is responding, how the West is responding to Putin's claim of those two regions in the Ukraine. And the same thing they're going to deduce is going to happen with themselves in Taiwan. So geopolitically, this is a very tense moment. And it could be that because almost everyone understands that Biden is a transitionary president to take us out of the potentially take us out of the Trump era into a new era, but now you're seeing Trump wants to come back. They know that they have an opportunity here with a weaker president, with less popularity, with a very divided Democratic and Republican Congress, and they're trying to take advantage of it. I don't know if they're going to go all the way, because Taiwan is a big move for China, and it will involve Australia and many other nations will get involved there. It's a huge move if China's going to do it. So what we're seeing right now is almost like a demo for this bigger chess match that's going to happen between China, Taiwan, and the West.
That's some powerful insight. Thank you so very much. And this obviously illustrates my point about you needing to be educated and on the, pretty much the pointy end of everything that's going on in the world. So again, I thank you for that. Now, despite all of this, what are you seeing with precious metals? I mean, they seem to be rallying right now.
Yeah, I just woke up to see gold. It's 8:30 when we started the interview here, 8:30 a.m. So yeah, I mean, gold is doing phenomenally well for three reasons. One, in November 2021, Powell stopped. And by the way, Rick, I created a special report for all your listeners with this entire thesis and 2022 outlook, which all your listeners and viewers can tap into and download for free at Wealth Research Group, wealthresearchgroup.com/2022, basically 2022. Mm-hmm. But also go to our website, and I'm telling you this because obviously we can't pack everything into an interview. If you go to our website and you look at wealthresearchgroup.com, you can obviously sign up for the newsletter, and then you get direct access to everything that I'm researching and doing straight to your inbox. But above and beyond that, you can look at the top menu, and there are tabs there like special reports where you can download a lot of PDF downloads that deal with precious metals and otherwise. And also there's another one called watch list, with I think is interesting because those are watch list of companies that I'm personally going to either own or wait for a certain limit price to get into, and those are and what's in those reports is those limit prices that I'm looking to get into. So a little bit of everything there. In terms of precious metals, I see three things. One is when Powell pivoted after having a closed door conversation with Biden and said we need to retire the word transitory. That was done obviously as a contingency for Biden reconfirming Powell to a second term, because whilst saying that it's transitory had some merit before the Delta variant spread. Yep. After that, and because China has a zero COVID policy and a lot of other countries just shut down everything, the demand side, so the demand for goods, for apparel, for appliances, for anything that's the finished good in the United States and around the world was so big because everyone's in lockdowns. You can't spend so much on services like going to a hair salon or this and that because you're locked or in self-isolation, etc. Creates such a big problem on the ports and on truckers and on logistics that inflation is not just a problem from the demand side, it's a problem from the supply side. And that's something that the Fed and other central banks cannot influence that much. They can raise interest rates and cause people to think twice about, spending and originating new mortgages, taking out loans, business loans, etc. They can influence the demand, but they cannot change supply. That's up to government to legislate and regulate and figure it out with incentives and otherwise how to get logistics going again. So once that it became apparent that inflation is going to stay with us and become more entrenched because there's a shortage of real estate around the world, and rents are climbing because to a lot of people, an apartment or a home is not just a place to crash anymore. People stay at home for large durations of the day. Whereas, before the pandemic, people, they leave the house at 7 a.m., they come back at 10 p.m. So, they don't spend too much on what's going on in the apartment. Right now, living at home is basically what everyone does. So it created a huge boom on real estate when builders were not ready. So with everything that I'm saying, inflation is becoming more entrenched. The third thing is that the Biden administration thought, well, hey, we'll give the jab to everyone, and then everyone will go back to work. And it turned out to be too simplistic of a thought equation. Many people are literally course correcting their lives. They're just sitting at home for another month, another 2 months. That's fine. I just don't want to commit to a new trajectory before I'm sure of it. So a lot of people are just staying at home because they're trying to find new careers.
Yep.
A lot of people have gone back to study because they're trying to shift careers. And a lot of people have retired because their portfolios have done so well in the past 2 years that now only one spouse, either the husband or the wife, works, and the other one is semi-retired or just takes on occasional consulting or stuff like that, or online jobs. But look, the workforce is very tight, so wages are also going up. So you have this trifecta of congested logistics, being too late for the Fed and other central banks in terms of realizing it, a failed plan to get people back to work, that's a labor shortage, and all of that is creating a lot of inflation around the globe. That's one thing that's helping gold. Secondly, the second thing that's helping gold is that the stock market is really bad this year. So as a hedge, it's really an important asset class, gold is. And thirdly, you've got the geopolitical tension, which makes people want to go to safe havens like gold. So that's the three things that are really helping gold in 2022. And I think that gold is going to actually go into new all-time highs this year, above what we saw in August of 2020. So it's going to be a phenomenal year for gold and a phenomenal year for gold equities. And one thing we do with the newsletter, Wealth Research Group, is we profile companies that we love in terms of the mining space and obviously technology and otherwise, but our specialty is in finding companies inside of the mining sector as well.
Do you, first of all, every time I speak with you, it's not just a cursory level conversation. These are really deep insights that you provide to the audience, and I know that it's powerful, and I know that the audience absolutely loves it. So I have to thank you again. Now, what do you think of the royalty groups that are out there, the gold royalty groups? Is that something that you should get invested in?
So gold, the royalty business model is absolutely the historically the best business model in the world for mining companies. Those are not even mining companies. They're almost like finance companies within the mining sector.
Yep.
If you look at, for example, and I don't own shares of this company at this time, but Royal Gold, if you look at their price chart from 1992 until today, it went from 2 cents to over $140. And if I'm not mistaken, it's the number one best performing company in the world for the past 30 years. Better than Amazon, Google, and the rest of them. From 2 cents to $140 in 30 years. So obviously the model works. The behemoth of this model is Franco-Nevada. And my company, with Wealth Research Group, we are partnered with a company called Gold Royalty Corp, which is the newest and fastest growing royalty company in the world right now. CEO
Garofoli?
Yes. Mm-hmm. The CEO is David Garofalo.
That's correct. Yes, I always get it wrong.
He was the CEO of overseeing the merger of Newmont and Barrick. So he's absolutely one of the titans of this industry, and he's the CEO of Gold Royalty Corp, and it's just merged with an Eric Sprott company. I mean, this company, we're very proud to work with it, and it's done very well, and it's a new company in the space. So while Royal Gold and Franco-Nevada are much more seasoned, this company is just IPO'd last year. So I think the royalty sector in mining is a phenomenal way to get involved in general, obviously for the right price and do your own research, etc. But when gold is erupting, like right now, when it's breaking out, there are companies that are either in developing a project or producers, smaller names, not the bigger names, where the liquidity of the stock is so finite because they're smaller cap companies that when they get attention, and you get in early, you can see gains of thousands of % in terms of months and not decades, which is very exciting. We're actually going to profile 2 new companies on the newsletter in the coming days and weeks.
Yes, fantastic news. Now, I love this sort of conversation, and as you've mentioned, Lior, there's just not enough time in one single call to go over all of the details that I'd love to talk about with you, but I'm sure and certain that if people visit wealthresearchgroup.com inside that report, they're not only going to get a discussion about, global events and impacts on markets, but, precious metals and, mining stocks and cryptocurrency and all the rest of it. What else can people expect to find in their report?
So the newsletter, it basically is a way for me to take everything that I'm researching. If I'm talking with CEOs of companies, if I'm talking to hedge fund managers, if I'm researching books and whatnot, and basically I'm congesting my insights into 3 articles a week that go out Sunday, Tuesday, and Thursday. And then if there's on top of that very important bulletins, then we also issue those. And then on top of those, that more of a macro and general operation, we feature specific companies and stocks that I own, and we profile their business models as well. So that's basically the elevator pitch for the free newsletter.
Now, I know that it is a high quality newsletter. The correspondence is excellent. I love how you highlight in yellow what's happening. The headlines are always catchy. I always open them. They're a real credit to you in what you're doing at Wealth Research Group. So congratulations on the success that you're having. Now, if you are on the call today, you should by now get a feel for just how much goes on behind Wealth Research Group to get this content out to you. And so make sure you visit wealthresearchgroup.com. I'll be making sure the links are available to you below this post, no matter where you see it. You'll be able to get back in contact with Lior with no problems at all. So with all that being said, Lior, you know what? This is just a next level conversation that I always enjoy having with you. So thanks again for joining me on the show today.
Thank you, Rick.
Thanks for joining us today. If you enjoyed the call, then make sure to subscribe, leave a comment, share us with your friends, and book your spot on the show at myfuturebusiness.com/interviews. And if you're looking for solutions that will help grow your business, then visit myfuturebusiness.com/shop.